Hello. How are you doing, friends? I'm your stock analyst, CT, driven by a deep passion for the stock market. I'm here to share data-driven insights into how to make smarter, more confident investment decisions. Okay, before we get into it, let's make some statements. Rich risk warning and investment disclaimers. Stocks are risky assets, so make investment decisions wisely. CT share stock analysis only, but does not provide any recommendations. Avoid emotional attachment to a stock. Focus on improving your odds of success. Golden rule: buy low, sell high. Let's get started. Next week, we will have some major companies reporting earnings. Monday, TMX, the exchange, $12 billion in market cap. Wednesday, Great West Life Co., $43 billion. Dayforce 16, First Service, $12 billion. Thursday, Constellation Software, Suncor Energy, Belt Inc., IGM Financial. Well, put a comment below to share which stock interests you the most. Let me know why you find it interesting. This past week has been all about DeepSeek. The Chinese AI app has made a significant impact on AI-driven bull stock market and have posed a challenge to one of the largest companies, NVIDIA. Before I dive deeper into DeepSeek, I wanted to understand the animal featured in its logo. So I asked DeepSeek, what animals is used in your branding logo? Surprisingly, it referred back to its source, OpenAI. I was totally shocked. So I asked again specifically about DeepSeek's logo. DeepSeek said that it is a rabbit. What? Is it a type of fish or a blue rabbit in its logo? I'm quite confused now. If you're curious, I encourage you to give it a try for yourself. I'll share my screenshot at the end. Okay, when I'm thinking about a blue rabbit in the ocean, sinking deeper and deeper. Guess what? I found a stingray. Haha. The Stingray Group Inc. will publish their earnings report next Tuesday on February the 4th. Stingray operates three major business lines. The first focuses on retail advertising services by creating in-store media. The second line involves music content, which includes music channels, music video streaming, karaoke, in-car music channels, and health and wellness programs. They also offer a piano learning app. The third business line is radio, which is currently available only in Canada. So approximately 86% of the revenue comes from North America, with 56 from Canada and 30 from US, and 14 from other international countries. So by analyzing the quarterly income report, we can observe that subscription-based service, this one, and radio business provide relatively stable income compared to advertising and other related sectors. Additionally, some seasonality can be seen in the earnings. So you see high, low, high, low, high, low. Okay. And look deeper, examining the operating condition in details, we note that EBITDA has been steadily growing despite the changing market conditions during COVID-19 and subsequent interest rate hikes as central banks attempted to control inflation. Okay, excluding the March 2024 report, the average net income has remained fairly stable. The stability could be influenced by interest rate hikes, volatile exchange rate resulting from differences in interest rate among countries and also credit risk. However, there was a significant drop in the net income in March 2024, which is attributed to an impairment in the radio segment. But looking forward, Stingray continues to grow through strategic acquisitions and the launch of new music programs. They are globally diversified across markets and regions, and they are expanding business segments to capture new opportunities. And I like their recurring revenue model, which is subscription-based, provide stable cash flow. Okay, to further support this thesis, let's take a closer look at the company's financial position. The current ratio, which measures its ability to meet short-term liabilities, has been steadily improving since the impact of COVID-19. The debt ratio, which indicates long-term financial stability, has remained relatively stable. Additionally, the debt service coverage ratio, which was approximately 0.6 in 2021, has significantly improved. Now it's ranging from 1.5 to 1.9 times, but we still need to monitor its debt level. And Stingray stock currently has lower PE compared to its closer peers. And the company is positioned for strong growth, driven by key factors, such as Canadian tax holidays, which boosts demand for retail's commercial music and the potential economic uptrend, fostering expansion in both B2B and B2C contracts. Additionally, global expansion and technological transformation are accelerating its growth trajectory. However, certain risks remain, including a heavy reliance on licensing agreements, which could impact revenue stability, and geopolitical uncertainty such as potential policy shifts under a Trump 2.0 scenario, which may introduce market volatility. Balancing these opportunities and risks, which will be crucial for sustained success. I have been working on a financial analysis to evaluate RAY.A, the Stingray stock, on Toronto Exchange. I wanted to share my findings with you. So I created multi-stage free cash flow models to explore a few different scenarios. The first model is a traditional approach which assumes positive growth and decreasing interest rates. But the second model takes into account the inflation risk related to US tariff on Canada, which may affect the growth rate. Finally, I put together a pessimistic model that consider changing market conditions and their potential impact on growth. Based on this analysis, the estimated variation ranging from 11 to 15 in the optimistic scenarios and around 11 or slightly less when factoring in inflation and between 2 and A for pessimistic scenarios. I hope you find this helpful. Let me know your thoughts. Before we examine the stock chart, let's first review the stock ownership report. Approximately 19% of the shares are held by institutional investors, with CDPQ being the largest equity holder at around 16%. CDPQ is one of the largest pension plans in Canada and the biggest in Quebec. Since Stingray's headquarters are located in Montreal, Quebec, it seems to have significant support from this pension plan. There are also two main insiders, the chairman and the CEO, who together owns around 16% of the shares. Apart from that, the stock is primarily owned by individual investors and private companies. RAY.A has shown a positive upward trend recently, rising from 6.75 to 8.36, marking a local high in the past 2 years. The stock appeared to have established solid support at 7.51, which aligned with the 200-day moving average. The 8.5 level serves as a significant resistance point, and a breakout could occur if this threshold is exceeded. Conversely, if the price drops below 7.5, which may signal a bearish sentiment in the market. Okay, what do you think? And that's a wrap on my short and sweet stock analysis report. I will post my conversation about DeepSeek logo with this DeepSeek. What animal was used in your branding logo? It refers back to OpenAI. And I thought DeepSeek was confused, so I asked specifically DeepSeek's logo. So DeepSeek is telling me a rabbit. Because it hasn't been able to analyze picture, I guess. Anyways, please click like and subscribe. Wishing you a great trading week ahead. See you next time.